The way limited companies pay tax has changed recently, and this affects everybody with a limited company. In today's YouTube video, we're going to start by explaining these changes, especially why you might pay more tax than you think. Then at the end, we're going to finish off by telling you about a massive tax trap that is to do with associated companies and how that is affected by the recent changes. So please don't fall into that tax trap. If you find these YouTube videos useful, it really helps us if you drop a like and hit the subscribe button so you don't miss any more videos. And if you have any questions, drop them in the comments and we'll do our best to answer them. An associated company.
Yeah. So kind of back in the old days when we had all these different rates, we had to think about associated companies. And I have to say, it's been so lovely having just one rate of corporation tax because we haven't had to think about this. But it all now comes back into play. So what does an associated company mean? Basically, if you have an associated company, then those tax thresholds that we've talked about, that 50,000, that 250, is divided by the number of associated companies. So if you've got two associated companies, it's not the first 50, the 50,000 gets divided by 2. So you have to now, when we're looking at corporation tax, it's not just about, okay, well, we're looking at this company. We've got to then look at what are there any associated companies? And I was talking to a client, and I think, Tommy, what I'll do is I've got some examples to show you. So if I talk through them, because I was chatting through a client and what he thought was going to be his corporation tax with the associated company rules was completely different. So let me put on
Is it a
screen.
spreadsheet? Is it a spreadsheet?
Yeah, I'm an accountant, Tommy. Of course it's a spreadsheet.
Okay, we only allow spreadsheets to be shown on this podcast. So if it's a spreadsheet, that's fine. No other slides are allowed. And also, if you're not watching on YouTube, check out our YouTube because the slides do help understanding. Oh, that is a beautiful spreadsheet.
So let me just go through, because I want to go through kind of what this person's position was kind of before the corporation tax rate. So I've got a doctor, he's got a trading company, and he's also got an investment company. So I know, I think you did a podcast on investment companies, didn't you? So he's got 2 companies. So before all the corporation tax rules changed, this was his corporation tax position. Trading company makes 110,000 profits. Investment company makes 6,000 profits. So nice and easy. Corporation tax was at 19%. So total corporation tax for the 2 companies was 22,000. So I had a chat with him to say, well, look, you've got 2 companies, they're associated, then the thresholds get divided by 2. But what he thought was going to be what he thought with the corporation tax rate changes is he thought that his corporation tax was going to be. So this is what he thought the position would be. He was looking at his trading company and saying, right, I've got £110,000 of profit. My first 50,000 is going to be at 19%. And then my next 60,000 is going to be at 26.5%. And then my investment company, I've got 6,000 of profits. That's all going to be at 19%. So this is what, when the changes were announced with corporation tax, he thought, okay, my corporation tax liability for both companies was 22,000. It's now gone up to 26. I've got an increase of 4,500. And of course, I then had to go, I'm really sorry to tell you this, but your 2 companies are associated. So your 50,000 threshold is divided by 2. So this is actually what happens when you've got an associated company. That 50,000 so it's 2 associated companies is divided by 2. So we're now looking at the first 25,000 in each company is taxed at 19%. And then his trading company, he's got 85,000 being taxed at 26.5%. His investment company has only got £6,000 of profit, so that's fine. That's all taxed at 19%. So his total tax is actually 28,000. So it's an increase of 6,000. And the problem with this situation is that he is losing £19,000 of profits being taxed at 19% because his investment company, that threshold has been divided by 2. So that investment company has only got £6,000 of profits. So only 6,000 is taxed at 19%. That 19,000 of the threshold, he's lost it. It's 25,000 for the investment company, 25 for the trading company. Obviously, if these two companies were earning, I don't know, 100,000 in each, it's not so much of an issue. It's an issue where one of your associated or one of your companies has a smaller amount of profit. It means you're potentially losing some of that 19% tax threshold band. So it's really important that sort of clients, especially if they know that they've got other companies or they've got shares in other companies, or that they actually kind of understand how many associated companies there is, because you could have, I've got this example with 2, but you might have 4 associated companies. So if there's 4, then those thresholds are divided by 4.
Yeah, okay. So like what qualifies as an associated company in this case? Why are these two associated basically?
So what an associated company is basically, so there's I'm going to give you some examples, but there's you're associated if one company or a person has control over another company, and control is normally defined as more than 51% of the shares, i.e. the voting rights. So we've got sort of scenarios where a company might control another company or a person. So this scenario, this was a doctor who had control. These were both his companies. He had 100% of the share capital in each company, so he controlled both of them. Tommy, can I do some more examples for you and just talk through them, because it's not as straightforward as just yourself as an individual, and if you've got more than 51% in each company. So let me give you a simple example first. So this is an example where I've got Dr. A, and he owns 100% share capital in Dr. A Medical Limited, and then Dr. A Medical Limited actually has shares in B Limited. So those two limited companies are associated because Dr. A controls A Medical, and then A Medical controls B Limited. So in that scenario, two limited companies are associated. This other example I've got is Dr. A. So this is the scenario that I've gone through in that example, is Dr. A has 100% of the share capital in A Medical Limited and 100% share capital in A Investment Limited. So Dr. A, being the person, controls both those companies, so they are associated. So those thresholds will be divided by 2. Where it gets slightly more complicated, and this is where you then have to sort of start thinking about, we talk about persons, but we also have to think about, are there any people connected to them that overall jointly they have control? So connected people will be husband, wife, partner. You then have to look at husband, wife, partner, brother and sister. So if jointly they have control, i.e. you as a person and your connected parties have control, then those companies are connected. So I've done another example here where I've actually, sorry, it looks a bit messy. I've got Dr. A. Dr. A owns 70% of A Medical Limited, and his wife owns, spot the mistake. I don't know, actually, could I have a 10% somewhere else? So I think Mrs. A was supposed to own
10% offshore with no one knowing who's owning it. It's in the Bahamas. That's all we can tell you.
This is what happens when I do stuff late at night. So, Mrs. A's got 20% and the offshore organisation has 10%. So, and then of the investment company, I've got Dr. A owns 20% of the investment company and Mrs. A owns 80%. So when you just look at Dr. A, you're going, 70% in A Medical, but only 20% so I've done all my maths completely wrong. 30. So let's say they've got 20% in A Investment Limited. So you might go, 70% in the trading company, 20% in the investment company. Therefore, they're not associated. But when you bring in the connected person, i.e. the wife, and actually between both of them being connected, they both have control over both these companies, they are connected. So it's not just about you as an individual, it's also about your connected parties as well. And do you overall have control? There's also talk about business partners could be connected, but you have to then start to look at, are the companies, dependent on the same staff, the same premises? So it can get quite complicated, the associated rules, which is why when it was just one rate of corporation tax and we didn't have to worry about it, it was lovely. And now we've all got to go back and remind ourselves of the complicated associated rules. But what I would say to anybody is, obviously, if you've got a company and you're concerned that, okay, am I going to be affected by the associated rules, is obviously speak to your accountant, have a chat with them so that you understand what that impact is going to be on your corporation tax. Because as that example I showed, you might think you know what that change is going to be, but when you bring in associated companies, then obviously it does have quite an impact.
Yeah, okay. And it's just basically largely defined by control, voting rights, share ownership, basically.
Yeah, it is. It is about control. When you start looking at business partners, you have to then you look at kind of, are they dependent on the same things like premises and staff? But ultimately, very straightforward. It's about who's got control of those companies, and it's not just your individual control. It's then looking at, who am I connected to? Do we jointly have control?
And presumably as an anti-avoidance measure, essentially, right?
Yes.
Because otherwise you could do some pretty creative accounting here, which would, okay.
Exactly that.